Joining us right now to talk more about it is Jan Kniffen. He's the CEO of J. Rogers Kniffen Worldwide Enterprises. Jan, I know you're in mourning about this morning. I'm heartsick over this. I actually went to Toys R Us yesterday before the news was official, tried to talk to some employees, went through just to take a look around the store, and I've got to get my kids back into some of these so that they can have a last go-around on this.
I'm going to miss Jeffrey the giraffe. I don't know about you, but I raised two kids in the 70s. We were in Toys R Us the whole time.
But hold on, is he totally going away? Because I then read some reports suggesting that maybe 200 stores may stay open.
Well, somebody's going to buy the asset right of some sort. I mean, Toys R Us, the name probably isn't going to go away because somebody's going to want to own that. It's a great brand. And we may see it online only, or maybe online with the 200 stores or a half a dozen stores. Something will happen there. But the Jeffrey Giraffe, as we all knew it, and the big category killer big box stores, that's gone.
I know that we have talked about how Amazon is the category killer, how online shopping has changed so much, but that's not the only thing at stake here. Part of it is the debt that was loaded up when the company was taken private.
They could have probably survived a long time had they not been loaded up with debt, but it doesn't mean they would have been successful. By the time they were bought in 2005 by Bain, KKR, and Vornado, the category killer was already dying, and Walmart was the biggest problem, and now we have the hammer and the anvil both, right? We have Amazon as the hammer and Walmart as the anvil, and it's not just Toys R Us, it's a lot of retail businesses. But clearly, when you're the biggest seller of toys, i.e. Walmart is the biggest seller of toys, and when you're the biggest seller in the fourth quarter, and when you use it as a loss leader, and when you're going to win the game on toys at any expense, the guy who's competing with you is in big trouble.
But so to the extent that there's also a separate narrative going around, and I think it's to Becky's point and the point you're making about the debt issue, especially given that this is happening, by the way, in concert, just by happenstance, the day that iHeartRadio is filing for bankruptcy as well, another private equity, that private equity is responsible, that this is an indictment of the private equity model.
Yeah, see, I don't see it that way.
You don't see it that way.
Private equity succeeds, private equity fails. It just depends on how well they operate the business, right? And how
I guess my question is, if you didn't have $5 billion of debt, is there something that they could have done?
Yes, they would still be probably operating, and maybe Bonton wouldn't be in bankruptcy either. But it doesn't mean that they would have been successful against what I think is the death of the category killer. All the category killers are gone. Why are they gone? They're gone because mostly of Walmart and Amazon. So over time, do I think they would have still been a wasting asset? Do I think they would have still had low ROI? Yes, but they might have still been operating. It's really hard to kill a retailer that's not levered because all you've got is the inventory. If you can get it in fast enough and you can sell it, you can keep operating, but it doesn't mean you're successful in the world of retail. I think Toys R Us was already there in 2005, and the trajectory was set. But yes, sure, as soon as you load it up, you could go broke a lot faster. It could also have been successful by loading it up, right? It could have all worked in the transaction. In this case, it didn't.
What do you think there really is room for a toy store that is simply a toy store? I mean, this gets back to that question.
Because you're operating all year long, and the fierce competition comes in the fourth quarter when you have to make all your money, and suddenly there you've got Walmart with the lowest price on the toys, and there you've got Amazon with the biggest selection. So how do you pay for the business when you're trying to operate it for a full year? Sure, a small toy store in your neighborhood that's high-end, that's cool, that's a place you can go, it's local.
It has a very
they may go on forever and they may be successful. But to be a big, competitive toy store in the environment we're in today, not going to happen.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.